Hello everyone. This is the pre-market report video for today, April 6th in the Indian stock market in terms of Nifty and Bank Nifty. Yesterday, Nifty opened a gap up of 25 points and within 5 minutes it added another 30 points, then continues to move above gradually in the upward direction and reached 17,550. I think most of us know yesterday if you see the whole Asian market, it just only Indian market major index that closed significantly positive. All other Asian markets major index such as China and Korea closed near flat and Japan closed over 1.5% negative. The reason I presume it's more of the profit booking and short covering. For example, yesterday auto, power and PSU banks that closed negative and those were the one that got good run up in the recent days. Whereas recent previous week's draggers such as capital goods, FMCG and IT increased by 1 to 2%. I mean, it's kind of making sense. IT stocks has been sorted heavily in the recent month. Now from 12th next week onwards, TCS and Infosys going to declare their results. Because of that, I expect investors to cash their position and not to hold it for the judgment day. Then after our Indian market, European major index closed mixed. I mean, both Germany and France closed negative, whereas UK FTSE closed positive as the index was mainly made up of energy stocks. Then coming to US market, the momentum was really negative, but the major index didn't close that much negative. In order to explain, I found this heat graph in Reuters.com. If required, please pause it and have a look. This is the status of US market last night. I mean, only 4 sectors such as healthcare, energy, consumer staples and utilities out of 13 major sectors in S&P 500 closed positive. All other 9 sectors closed significantly negative. Tech stocks was the major draggers. I presume all happened because of 2 major macro releases yesterday. First, before the US market opening, a private payroll processing company called ADP released the number of non-farm jobs added in the month of March. The data comes as only 1,45,000 new jobs were added against expectation of over 2 lakhs. This immediately made the momentum negative and starts to put pressure on both tech stocks and 10-year Treasury bond yield. I mean, 10-year Treasury bond yield drops below 3.3%. Just for info, last month same time it was above 4%. Now this sudden drop kind of creating the panic and it's showing one very important information. All of a sudden there is a high availability of dollar in the market. This only happened if the US economy significantly slowed. As a result, the investors moved their money to some of the safe havens where this slowdown won't affect much. That might be the one of the reason why all of a sudden Indian market turns bullish now and Indian rupees started to appreciate and even the Indian forex reserves reached almost 580 billion US dollars. Anyway, moving on, then the second macro that hurts the US market further was ISM PMI data. I mean, around 10 a.m. Eastern Time, Institute of Supply Management released the service PMI data and the data comes as 51.2 against expectation of over 54. It means US service economy grown very marginally and this is the third lowest value that comes below 55 since around April 2020. The most hurting part here is all 3 times that comes below 55 was in the last 6-month period. All these severely dented the sentiment. In the end, Dow Jones is the least affected one as it got the energy stocks in it. It increased by 0.24%. S&P 500 down by 0.25% and Nasdaq was the one that got hit most as it crashed near 1%. In US market too, it's not all negative. This recession fear now increased the probability that over 60% Fed will start to reduce the interest rate from July month onwards. But at present, the damage kind of done already. Let's see. Then about crude oil, it's more or less same as day before yesterday. In terms of numbers, at the time of this video, WTI crude oil was traded near 80.5 US dollars per barrel and Brent crude oil was traded near 85 US dollars per barrel. Coming to Indian areas in US market, it's not that bad as Indian market closed significantly positive. ICICI increased by 0.32%, whereas HDFC Bank increased near 1.5% positive. Regarding IT stocks, both Wipro and Infosys closed near flat or marginally negative. As a overall, based on ADR, there was some negativity around the IT stocks whereas for banks, I will call it more of the positive. But the worrying thing here was HDFC Bank in Indian market, it closed positive of over 2.5%. Despite that, in ADR, it was up only near 1.5%. Is it a problem? I don't know. Only time has to answer. Then regarding SGX Nifty, at 3 a.m. Indian Standard Time, it closed at 17,590 mark. By equating it and future market value to our spot market, at present it's showing gap down opening of around 25 points. Regarding stock and sector specific, there is not much that I'm aware of it. However, there is only one thing I like to highlight today is at 10 a.m. Indian Standard Time, RBI is going to announce their interest rate decision. The wide expectation at present is that they are going to increase the interest rate by 25 basis points. But by any chance, if they didn't increase any, then it might turn to be huge positive and it might create another rally. As a summary, last night, momentarily, global momentum deteriorated significantly. Will the Indian market defy the global momentum for the second consecutive day? It's a $1 million question. Let's see. Coming to technical, yesterday on daily chart, Nifty forms a bullish separating line candle formation. Technically, it's a two candlestick pattern that forms in the uptrend signifies the more uptrend. I mean, the first bearish candle signifies the selling pressure. Then the second candle that opens at the same first candle opening place and formed a long bullish candle. This signifies the weakening of bearishness. However, Nifty closed positive for the fourth straight session and it increased over 3.5% in the last 4 trading sessions. So, there is a chance upside may be limited due to the upcoming RBI policy outcome. So, in order to maintain the positivity in the short term, Nifty has to hold 17,400. Moving below 17,400 can create a fresh selling pressure. But for now, the short-term trend looks positive. Nifty got the potential to move towards 17,800. Coming to moving average, in addition to Monday closing, yesterday Nifty moved above 200-day simple moving average and 50-day moving average. So as a summary, 9 in favors and 3 against it. Thus, it's upgraded to buy signal from neutral signal on Monday closing. Even the technical indicator summary, it improved to strong buy from buy signal. In case of Bank Nifty, it forms a doji candle, shows the indecisiveness that surrounds the banking stocks which are waiting for the interest rate decision. However, both technical indicator summary and moving average summary, it's same as Monday closing, strong buy signal. Regarding RSI value, both Nifty and Bank Nifty is around 59. From option change in open interest, there was a significant call options unwind between 17,300 to 17,450 and huge number of new put options added between 17,400 to 17,500. So, based on the opening, if Nifty opens and sustains above 17,500 in the first 2 hours, then 17,500 can act as the immediate support, but there is a huge chance it might open below 17,500. From options open interest data, 17,500 got the maximum put options followed by 17,400 and 17,300. Since both 17,500 and 17,400 also got the significant call options, thus I think 17,300 is the good support to look out for. About call options, 17,700 mark got the maximum call option open interest, so 17,700 is the resistance to break. Then coming to Bank Nifty, based on change in open interest, huge short straddle were added at 41,000 and it is the same based on overall options open interest data as well. The next maximum call option open interest without put option is present at 41,500. So 41,500 is the resistance to break. Regarding put option open interest, 40,500 is the mark that got significant put options with very small call option open interest. Thus, 40,500 is the immediate support. So that's all in this video. Hope you all got some useful information. Please consider subscribing the channel and liking the video so it will help me beat the algorithm and it will also motivate me to do more. Please don't make any investment decision based on this as I'm not a SEBI registered advisor. I'm doing it for my and viewers' educational purpose only. Thanks for watching.